Time to get a fundamental view on the markets. For that, we've got Sandip Sabharwal of Prabhudas Liladher now joining in on the show. Sandip, if we were to talk about the long-term trajectory of the markets, do you think that perhaps the volatility will be behind us in this year and that the second half of FY13 we could see a smart recovery? What would be your year-end target?
Good afternoon. If you look at markets, traditionally they have done better in the second half of the year over long periods of time. So I think to that extent one can expect that the second half will be better. And in terms of fundamentals also, I think most of the factors which are affecting the economy negatively in terms of the pulls to the economy on the downside, be it continuously rising inflation, high commodity prices, or government inaction, I think we have seen the peak of all of these. So we are likely to see improvements on these fronts going forward. On pure valuation terms, markets are pretty attractive and markets are trading at valuations which are much lower than historical valuations. Now the key is that what will be the pace of upside, and I think the pace of upside will depend on both global and domestic factors. So I think global factors in terms of having a negative impact on the market, I think most of the negativity is already factored in, and to that extent the impact could be muted. So I would say that markets have more upside than downside. Downside is extremely limited, and my year-end target, if you look at this year, could be around 19,500 for the BSE Sensex, and I think that's something which I think should get achieved.
Right, Sandip, now we're in the last few days of June. The first quarter is coming to an end. What's your assessment of what corporate performance could be like? Do you expect that in the first quarter corporate performance will have been under pressure, and do you expect that that's what the outlook for the coming quarters will also be?
I think corporate performance will clearly be under pressure. I think the key things will be to watch out will be that last year we had a continuously rising interest rate scenario, and so in that scenario wherever companies actually did well on the operating front, also it got taken away by increase in interest cost. So I think that should not happen this year. So I think that's one factor we'll watch for. Secondly, I think top line growth is clearly under pressure, but on the gross margin front, I think the pressures have reduced given the way the commodity prices have fallen and given that the wage pressures are also low. So I think we could see in this quarter that top line growth will be muted vis-a-vis last year, but gross margins could expand. And I think if that happens, I think that will be a decent set of results, because the market expectations from results are very, very low. So to that extent, I think any positive surprise, even if very small, could be taken encouragingly.
Right, but in terms of sectors, if you broke it down to sectors, which sectors would you say would worry you in terms of overall performance?
I think in terms of overall performance, I think the worrisome side is obviously on the global commodity linked sectors where commodity prices have been under pressure. So I think that's one sector which could underperform. Secondly, I think on purely valuation terms and over ownership terms, I think the defensives like FMCG and pharmaceuticals, I think those will be the sectors to watch for, because valuations continue to be very stretched in these sectors, and there is clear indication now that the consumer demand has started sagging a bit. So I think this could be one segment where we could see disappointment, and given the high valuations and over ownership, I think this could be one sector which could be an underperformer for the rest of the year. Overall, I think financials is something which I am positive, both private sector banks and private sector NBFCs and other financial institutions. I think so that should be decent. I think selective capital good companies like the market leader Larsen & Toubro, I think that looks good. We are playing the aviation sector positively because we believe SpiceJet and Jet Airways are well placed, and both are there in our portfolios to ride the up move because of the issues Kingfisher and Air India are facing. So I think on the mid-cap side, that's one segment we are playing.
And any other mid-cap conviction ideas that you'd have?
I think in mid-caps, we are trying to play companies which are cheap on valuation and where there's a strong macro story. So I think in our portfolio, we have a stock like Sterlite Technologies, where the company's profitability was under pressure last couple of years. but that profitability is going to come back this year. They are a clear beneficiary of rupee depreciation as the optic fiber cables are denominated largely in dollars. And yesterday there was a news flow that the government is looking at spending $3.5 billion in optic fiber network which will connect all rural areas. So I think this company would be a clear beneficiary. On valuation terms, the company is cheap. So I think this is one stock we are holding in our portfolio. Other mid-cap ideas could be stocks which are from the digitization space, because the entire digitization of the broadcasting network is now going to be a reality after the extension which has come through. So I think the cable companies or the dish, the satellite TV companies, or even the broadcasters, I think these will benefit a lot because of this move. So I think that entire segment also looks attractive to us.